Hey there, and welcome. Ever stare at a financial chart and feel like you're trying to read an alien language, just a jumble of lines and colors? Well, that's all about to change. Today, we're going to learn how to decode the story the market is telling us, and we'll do it by mastering two of the most powerful candlestick patterns out there. Think of it like cracking a code. All right, so here's the game plan. First, we're going to talk about what this whole market language thing even means. Then we'll get to know our two key patterns, the doji and the hammer. After that, and this is super important, we'll learn how to actually confirm what these signals are telling us. And finally, we'll wrap it all up with the key things you need to remember. So, let's kick things off at square one. Every single chart, every little candlestick on it is telling a story. It's a real-time record of a constant battle between buyers and sellers. And honestly, just understanding that story is the very first step to making smarter, more informed decisions. So you look at a chart like this, right? And you're probably thinking, what on earth is this trying to tell me? Right now, yeah, it might just look like a bunch of noise. But believe it or not, hidden inside that chaos are signals. Signs of indecision, of big reversals, of strength, and of weakness. Our job is to learn how to spot them. And that brings us to our first key pattern. Let's talk about the doji. You know, if candlesticks are like words, the doji is the market basically putting on the brakes and screaming, "Hold on, I have no idea where we're going next." It's a powerful signal of a total stalemate. So what a doji is really telling us is that the market's hit a pause button. It's a snapshot of pure indecision. It's that one moment where the pressure from buyers and the pressure from sellers are in a perfect dead heat. Whatever trend was chugging along before, whether it was up or down, has suddenly just run out of gas. Control is totally up for grabs. And how do you spot one in the wild? It's pretty distinct, actually. You're looking for a candle with long wicks. Those are the little thin lines sticking out. And a body that's super, super tiny, almost like a little dash. And get this, the color, whether it's red or green, it literally doesn't matter. It's all about that shape. That's what tells the story. And this shows you exactly what's happening behind the scenes. You've got the bulls, the buyers, trying with all their might to push the price up. And at the exact same time, you've got the bears, the sellers, fighting to shove the price right back down. They go at it for the whole session, and what happens? The price closes pretty much exactly where it started. The result? A draw, a perfect state of indecision. Okay, let's move on to our next pattern. If the doji is a pause, the hammer can signal a full-blown rebound. It's a totally different message, and it's one you're definitely going to want to learn how to recognize. Now, a hammer is what we call a bullish trend reversal signal. Okay, that sounds a bit technical, but all it means is that after prices have been falling, this candle shows up and signals a huge shift. It suggests that the sellers tried to keep pushing the price down, but they got totally overwhelmed by a wave of buyers who just rushed in and took control. It can often be a sign that we've hit a potential bottom. Spotting a hammer is all about its unique shape. It's got a small body up at the top and a really long lower shadow or wick. A great rule of thumb is that this lower wick should be at least 2 to 3 times the size of the body. And hey, just like the doji, the color of the hammer candle itself, not the most important thing here. Now listen up, because this is absolutely crucial. Context is everything. A hammer can pop up anywhere, but it is way, way more powerful when it shows up at what's called a major support level. Just think of a support level as a price floor, an area where buyers have historically jumped in to prop up the price. When you see a hammer form right on a level like that, it's a much stronger signal that a real rebound might be kicking off. So we've spotted a doji or a hammer. Are we done? Nope, not even close. Finding the pattern is just step one. Now we have to talk about confirmation, which is how we turn a simple clue from the market into an actual, actionable strategy. I love this quote because it really gets to the heart of smart analysis. A pattern is a clue, not a command. It's just a hint from the market, you know? It's not an order to go bet the farm. The real key here is patience, waiting for the market to actually prove that the signal was legit. So what does that actually look like? It's a pretty simple 3-step process. First, you spot your pattern, the doji or the hammer. Second, and this is the hard part, you wait. You don't do anything yet. You watch the next few candles to see what happens. And third, you look for a specific price breakout that confirms the whole thing. And here are the specific rules of the game. For a doji, remember that's our indecision candle, you need a resolution. You're looking for the price to move either above the high of that doji or below its low, usually in the next couple of candles. That move tells you who won the fight. For a hammer, since it's a bullish signal, the confirmation is much clearer. You wait for the price to break above the high of that hammer candle.
Okay, we've covered a ton of ground. So let's pull it all together and really nail down the key differences between these two super useful patterns. This is the stuff you want to lock away for later.
This little table lays it all out perfectly. A doji, with its long wicks and that teeny tiny body, is your signal for indecision, a stalemate. A hammer, on the other hand, with its small body and that long lower wick, is your signal for a potential bullish reversal, a sign that buyers are storming back in. Two different shapes, two very different stories.
So really, when it comes down to it, you've just learned the first few words of a brand new language. You can now spot a moment of pure indecision and a potential turnaround. You're starting to read the story that's happening behind the lines on the chart. So the real question is, now that you can see all this, what are you going to look for next? Thanks for joining me.